Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Lil Bubble, let me ride that rocket.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again. No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Lil Bubble, let me ride that rocket.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again. No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Lil Bubble, let me ride that rocket.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again. No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of elementary school math. Being comfortable with risk is very important.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again, again and again and again, again and again. Repackaged and re-leveraged again and again, again and again and again, again and again.
That's a scam!
Little bubble, let me ride that rocket.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again. No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again again and again and again again and again. Repackaged and re-leveraged again and again again and again and again again and again.
That's a scam!
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of like elementary school math. Being comfortable with risk is very important.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again again and again and again again and again. Repackaged and re-leveraged again and again again and again and again again and again.
That's a scam!
Little bubble, let me ride that rocket.
No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again. No one knew how much risk was in that system. Bilateral, bespoke, non-reported transactions. No one knew how much risk was in that system. Repackaged and re-leveraged again and again and again and again and again and again again and again and again again and again. Repackaged and re-leveraged again and again again and again and again again and again.
That's a scam!
Yeah, absolutely could pull it off without my math degree. Use very little math. Use a lot of like elementary school math. Being comfortable with risk is very important.
Lovely internet friends, welcome once again, episode 146 together. Nobody knew how much risk was in that system, right? Who would have guessed? Only our friend SBF. If only he knew. If only he didn't declare bankruptcy, and they would not have denied the $4 billion that actually were trying to reach the platform 5 minutes after the bankruptcy had been declared. What an unfortunate series of events, right, friends? At least that's one of the possible scenarios. We can't believe anything. This is what SBF said the past couple of days. He said that if he had not declared bankruptcy, and he did it because his lawyers and his peers told him that everybody from the exchange would have their deposits back immediately, and the restructuring would have been easy, and the money would have been found, and deposits would be open again. And that's the idea, kinda, behind chapter 11, that the restructuring is gonna happen, and they're gonna chop off all the unprofitable arms of the business, and they would go on. Now, how would this go on? How this go on? That's slightly crazy. It's not gonna go very well in the end. SBF speculated in an interview with a civilian reporter, something pretty cool. You should check the videos online. He said that most probably FTX US customers are gonna get their deposits back, or at least a large portion of their deposits back, while FTX International are gonna get what? 25 cents on the dollar, something like that. So for every dollar you had in the exchange, you're gonna get 25 cents. Not cool, guys. Not cool. I'm not sure how this is gonna end. What I know for sure is that it's not gonna end anytime soon. This is gonna take long. The Cryptopia case hasn't settled yet. That happened like 3-4 years ago. Time flies. So don't expect any of these to be resolved anytime soon. And to be honest, lovely friends, I'm gonna like this is one more bear episode. You have to understand that we're deep into the bear, but still far from the bottom. We're very, very, very far from the bottom. There is no that stage 3 that we usually find the apathy in the market, where stuff happens and nobody cares, even if it's positive, even if it's negative. At the moment, we're still at phase 2. We're still at phase 2. There are still some single narratives that pop and kind of go against the trend, and they die soon after. Nothing can really go against such a downtrend. And there are people still stuck on social media, still refreshing Twitter, still trying to find the opportunities and new great investments, and buy the dip and DCA and if I'm hearing lots of people saying, if I had a lot of money, if I had a lot of liquidity, I'd be buying now. I'd be buying everything. I'd be buying NFTs. I'd be buying Solana. I'd be buying Aptos. I'd be buying all the other ones, and I'll be buying big Bitcoin. I'll be buying like. You shouldn't buy anything. You shouldn't buy anything. Guys, the bottom is not in. The bottom is not in, because think about it that way. First of all, the general economy is going shit. But let's disregard that. Let's imagine that we're alone. At the moment, any external news is going to have a huge impact if they're negative. There is a lot of fear at the moment in the market. So any negative news is going to actually move the market quite a lot, while any positive news is not going to change anything. So you have much higher negative externality kind of probability than positive. If you're holding quite a lot of stablecoin on the side, which as we mentioned on the previous episode, I would advise that stablecoin to be on Ethereum, and if not stablecoin, you should hold Bitcoin. But lovely friends, people are still refreshing. People are still waiting for bombs to blow. We're seeing now, we're hearing stories about GBTC and Genesis and Grayscale investments. These are like serious players that have been in the market since 2013, especially the Bitcoin Trust, the one Barry Silbert has been managing for the past 10 years. It holds like what, about $50 billion worth of cryptocurrencies, and there's a lot of issues. There's an emergency funding request for Genesis. Doesn't seem that they'll find any money. They lowered this to 500 million. I don't see anybody taking that risk. Things don't look good. If GBTC goes down, not GBTC, I mean GBTC. These are all linked companies. There is the DFG group, which is a conglomerate which owns lots of businesses. One of those businesses, the Grayscale, the Grayscale fund, and all its different shitcoin or Bitcoin funds like GBTC, and some institutional grade trading platforms for large investors. So these are important this is important infrastructure for large fish in this bowl. You wouldn't want any of those to go down. Grayscale and GBTC has been traditionally the way an institutional investor, someone coming from traditional finance, would get exposure to Bitcoin. And if we actually take this link away, the crypto market is going to become much weaker. And if something happens to GBTC and it completely decouples from Bitcoin, even if now it's actually offered at a 70% discount, which is a lot, and it's not what would happen back in the day. That's something that's pretty new. The past couple of years we've seen such great discounts. But the idea is that such funds, just because they have lots of rules and they have specific dates during the year that allow new investments or allow cashing out or will rebalance the portfolio, the price of each share doesn't really correspond to the actual price of Bitcoin. At the moment, it's trading at a 65-70% discount. But traditionally, when Bitcoin goes up, GBTC will overshoot, and when it's going down, it's going to go way, way lower. I wouldn't want to see what's going to happen to the crypto market if these institutions cease to exist. At the same time, we're hearing about, and I see on the chat, School Kid is touching upon it. Is saying, what is this Safu fund Binance have created? So Binance is building a little treasury, a little Safu fund, insurance fund, let's say, which is going to be deployed wherever necessary to actually bail out the industry. So if emergency funding is required, they will deploy that, and it's also going to be used to bail out projects that have been significantly harmed from the collapse of FTX and the collapse of all the other projects that we've seen throughout the year go down. And it will provide funding. For example, REN protocol, which is one of the most important trustless bridges between shitcoins and Bitcoin. It's one of the non-custodial ways of wrapping your Bitcoin to an L1, so you can get the RBTC, the REN Bitcoin, on Ethereum, and then you can unwrap it in a trustless way, in a non-custodial way, by interacting with the REN protocol, and you can get your Bitcoin. So REN protocol was heavily exposed to Solana, heavily exposed to FTX and to Alameda, and after the collapse, they announced that they have about 1 year of runway, and it's a really important project to have around. Most people know WBTC, wrapped BTC. This is a similar kind of concept. The only and major difference is that it's a custodial solution. In order to unwrap that Bitcoin, you need to send it to BitGo. You need to send it to one of the brokers that maintain the peg and is audited for its reserves that kind of back the Bitcoin. But if you need to KYC, you need to go through the traditional finance bottleneck, which means your money can be stopped and questions will be asked. I'm glad. I'm torn between between the two sides. On the one side, I'm very happy that there is an effort to actually have an insurance fund to bail out some of the projects that have been extremely important. I'm glad that we're creating another pot of money that will deploy it in case of emergency. At the same time, I'm not very impressed. Proof of reserves tells me nothing without a list of liabilities. I don't care how much money you have if I don't know how much money you owe. And we all know the priority of getting paid. Who gets paid first? Who gets paid second? Who gets paid first? And who gets paid last? And guess what? Retail investors that have their little breadcrumb money in those platforms are always the last people to get paid. And that's why SBF actually admitted that FTX International Depositors, best case scenario to get 25 cents to the dollar. And as School Kid says on the chat, yes, Binance will prioritize the projects that are building on BSC, are building cross-chain, and are including BSC in this cross-chain, which is easy to do. If you go back in the Whale's Tales episodes, you'll see that we've spoken extensively about Binance Chain, about the Cosmos Hub, about how Cosmos is like how Binance Chain is one of the many chains that run around the Cosmos Hub and is powered by this technology. So it's not hard, and it's also virtual. It's an Ethereum virtual machine compatible, meaning that you can take code from Ethereum and very easily apply it on Binance Chain, which means it's easy to include Binance Chain in any cross-chain plan. So I understand the thought process. What's interesting to me, what's very, very interesting, and maybe you have, and I mean you guys, I'm looking at the combined chart from YouTube and Twitch, so maybe you can give me an answer. I saw in the Safu fund that Binance is creating, which is, by the way, it's not alone. There are multiple parties contributing to this fund. And one of the projects that contributed $150 million, $150 million, lovely friends, was Aptos. Aptos Labs gave $150 million for the fund. That's counterintuitive. That's something that I would not have expected. How much money do these guys have? Like their largest investor was Alameda and FTX. Their largest exchange and volume was coming from FTX. Their holders are part of the group that got butthurt the most. I'm not sure. I'm not sure if this is a bullish signal for Aptos, if this is something we need to disregard. This is something like... This is a really, really weird move. That's totally unexpected. I really don't understand. There is someone spamming things on the stream chat on YouTube. I'm sorry. I'm sorry for the YouTube viewers. So yeah, interesting move by Aptos. Kind of makes me now put it under my watch list, and I'm gonna look a little bit on how they allocate money. Yes, I know they have like 340 million, 380 million, or whatever, a lot of million. But I would expect they need that money for the runway to actually stay alive for longer. Lovely friends. So, going back to the subject, I don't think we've seen the bottom. Market psychology doesn't look like we've seen the bottom. People are still really into cryptocurrencies, something that the bottom should not have. There is still no apathy. We need to reach the apathy stage, where nothing happens, where we wonder if we've been forgotten. We're not there yet. We can't have single narratives going against the trend. for us to be in phase 3. So if we are in phase 2, and having in mind that phase 3 is the longest phase of all, we can only expect everything to go lower. Now, everything. Some things are going to go much lower than others. And the more you go down the shitcoin tier, the lower things are going to get. I see on the chat saying, how long will the bear market last? They're asking. Traditionally, it's 1.5 years of bull market, 2.5 years of bear market. That's the average. That's the average crypto market cycle. Of course, past events give no indication about future events. But this is the set we have to work with, so this is all we can do. Theoretically, as the market cycles progress, all this volatility should kind of die down. It's not something that we are seeing anytime soon. We haven't seen it on the last bull run. We are not seeing it in the bear market. So I expect things to go lower. I expect Ethereum to go lower, despite it being a great inclusion to your portfolio. I see most L1s go lower. Maybe Cardano can sustain its positive vibe. As we said, I'm turning into a Cardano fan now that I'm looking at how little it got hurt by the market crash, and not the actual market crash, not the bear market, but the Celsius and Luna and FTX and all that shit show. Cardano not having any DeFi, not having any stable coins, kinda came late to the party before the police, after the police had stormed in. I don't expect Bitcoin to go down to 2018 levels, 2018 levels. I don't expect us to go down. Oh, not 2020 levels. Sorry, that was March 2020 when the WHO announced that there is a pandemic. So no, I don't expect us to go down there. Of course, I'm no financial guru. There is no TA that can show you that information. There is no way of you reading the stars. Let's remember that TA, technical analysis, is astrology for men. I don't really believe in it. I don't really find it helpful, especially when we're hit by black swan events. So no, I don't expect Bitcoin to go down to 5K. I can see Bitcoin going under 10K for a brief moment of time, just catch a little edge of the candle. Again, these are like extremely speculative. We have no chance of knowing. There is no way of you ever buying the bottom in a significant way, in a sizable way. There is no such thing. There's no way you're gonna buy the bottom. There's no way you're gonna sell the top. Just get used to that. So just stay there, look at it, wait for the trend reversal, wait for the market to actually confirm that the reversal is there. Wait for traditional markets to show you that. Look at for the Federal Reserve announcements. Look at the rates changes. Look at the Euro USD ratio, FX. Look at world events. Look at the price of oil. Look at the price of natural gas. Look at the state of the war in Ukraine. Look at these things. These are the indicators that you need for a solid trend reversal. The trend reversal is not going to happen only in the crypto market. You still need to remember that the crypto market is tail risk exposure to a much larger risky portfolio. So you get your growth stocks, not your value stocks, not the banks and the powerful ginormous institutions that have been in the market for quite some time. You were talking about the growth ones, the ones that you're gonna buy now with the potential and the hope for it to actually be tapping in some new technology that is going to grow exponentially. Remember how Tesla stock behaved. Remember how all the tech stocks behaved. All these new pharmaceutical things that popped with COVID. Like these are the stock portfolios that usually hold crypto. Now, of course, there's going to be some pension funds. Of course, there's going to be some companies that have exposure to it, but those are exceptions. Those are not the rule. The reality is that crypto is tail risk exposure. And this is the most gentle and most polite and most professional way to talk about shitcoins to a financial analyst. You offer him not shitcoins, you offer him tail risk exposure. And there is a lot of like hope in the echo chamber of central banks adopting Bitcoin as a collateral, as a way to back their currency, as a way to create reserves to be deployed in a time of emergency. This is the wet dream, lovely friends. Having many entities, many countries, many central banks, many treasuries hold Bitcoin, in large portions of Bitcoin, not a hedge, a small hedge. I'm not bullish on this happening anytime soon. All the sailors, the pomps, the what's it called, the El Salvadorians, and all these guys. Now they don't seem like smart guys. Now it's the time where the rest of the market, the rest of the non-crypto world makes fun of us. And yes, the tables are gonna turn again. We're gonna get our short year where we're gonna make fun of them and call them poor. It's gonna come. It's a matter of when, not a matter of if. But now they are right. They are right. Sailor doesn't seem smart now. You can't have those guys anymore. So, lovely friends, and it's been a quite long bear market roundup. Quick reminder. Don't buy the fucking dip. Don't DCA on losers while the markets are crashing. Something that dropped 99% can easily drop another 99. And then another 99. So, yeah. Crypto is gonna stay a little bit under at the moment. So, a couple of questions from the chat. I see Mr. Denk now is asking if I'm holding any stablecoins in Solana. Unfortunately, my friend, I am holding stablecoins in Solana. I moved a lot in Ethereum. It's getting too expensive for me to be using the wormhole for such small amounts, because there is a cap on every amount of USDC you can actually pass through the wormhole. and it's getting too expensive. I'm looking at other options, but at the moment, just because Binance resumed the deposits of Sol USD, so for SPL USD, I'm less. I feel less threatened. I feel less threatened. Doesn't mean that I'm going to anytime increase my stablecoin holdings in Solana. I am not. I will try to actually de-risk on that. But this has only to do with my personal risk profile. I don't think that anything is going to happen to Solana stablecoin anytime soon. I know it's scary. I might have seemed a little bit more of an emergency last time, just because we had Binance closing down the gates for SPL USDC. I see people saying, I see who macro guys are saying 8 to 10 years of sideways markets. Is it possible? Anything is possible. 8 to 10 years is too long. It's too long for the technology to stay dormant. It's too long for a new narrative not to be spun. It's too long for the central banks to withhold money from the markets. I don't think the world would survive if we went into a new 10-year recession. The world is resilient, most probably it would survive. I don't think the current institutions would. We would see a huge reshuffle in the deck. So no, I don't think we're going to see an 8 to 10 year sideways market. I think we're going to see a traditional 2 to 3, maximum 3.5 years of bear market. And the bear market includes the accumulation phase. So we need the phase that goes down, 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 down. Then we need a small phase where you see some pumps that are immediately sold. And then we need to see the sideways, which is the accumulation phase, before we start seeing slow uptrend and then a confirmation of uptrend, and then everybody rushes and we go parabolic. And then it starts again. So when I'm saying we're going to get into the bull market, we're going to get out of the bear market, I'm saying that we're going to go through the accumulation phase as well. And in my mind, again, I have no extra information. But in my mind, this is about maximum 3.5 years. So no 8 to 10. Mr. Deng is asking about risks involved in regulation of stablecoins, freeze of wallets, centralized character of USDC and USDT. Yes, this is part of the problem with centralized stablecoins. It's part of the problem, yeah. And at the contract level, USDC can freeze your account, which means you cannot interact with any dApp. You cannot send USDC. The system will not accept your private key your private key will be blacklisted. At the contract level, you will not be able to interact with them. Which yeah, puts huge pressure in finding alternatives. At the same time, alternatives are risky, alternatives are experimental, and alternatives tend to fail, as we've seen with several stablecoins that are not pegged, either algorithmic or derivative. So you can get the algorithmic ones, which kinda think of Terra, think of Luna, where there is a system which keeps the price at a certain point, and then arbitrage mechanisms come into play to stabilize it. Or you have a derivative kind of stablecoin, which takes all the different stablecoins that are centralized. So you get the USDT, you get USDC, you get the PUSD, the Paxos dollar. You get all these things, and then you put them into a basket, and the basket keeps the asset stable, the derivative asset stable, and if one of those assets in the basket rugs or loses its peg, this translates to a much smaller blow on your derivative asset. At the same time, it's all experimental. So I'd prefer to take the risk as a non-US retail investor. I think that I have less chances of being targeted. My balance sheet is limited. My moves are pretty transparent, and I'm trying my best to stay legal, to be legit, to be lawful. That's obviously not optimal. Like, I wish I could go anonymous. I wish I could be using something that does not require KYC, that doesn't have this bottleneck and this gatekeeper, which can actually block you. And as you said, on the contract level, I don't think that this is going to happen anytime soon. If that happened, that would be the end of DeFi. That would be the end of pegged coins, USDC and USDT. They're just too big too big to fail. Let's put it like that for crypto. If they fail, we all fail. It's dead. The DeFi as it currently is will cease to exist. So yeah, that's it. That's it for the market, for the bear market. Someone I see Crypteras asked earlier, which is important to address: is Solana going to zero? Is Solana going to survive? I think Solana will survive. I think it's going to take a very long time for this to translate into profit for many people. So let's make sure that it's clear what I'm saying. Solana will survive. I don't think Solana is a good investment. So if you are looking to make money now, I don't think you should be looking at Solana. We need to take into account that there is going to be a lot of selling pressure as lawyers and whoever is overseeing the restructuring of all these companies that are failing, and this is plenty of those. Those lawyers will be selling quite a lot of Sol. Let's remember Alameda and FTX hold about 55 million Solana, not $55 million worth of Solana, but 55 million Solana. And all these are vested up to 2028. So slowly, this Solana is investing and will be sold. This is going to create quite a lot of selling pressure. At the same time, Solana has brilliant builders, a brilliant community that vibes very well with each other. The non-financial transactions part doesn't need to be associated with the speculative nature of the market, because Solana is working on governance, identity, reputation. These things are groundbreaking, are incredibly important. It's a very important piece of the puzzle, but I don't think it's gonna make you money. It's not gonna make you money. And I love the fact that Kishi is here from Epic's DAO. Huge shout out. Amazing, amazing guy. Big love. Yeah, and Kishi is also a builder that is working on non-financial transactions, is working on governance, is working on DAOs. So yeah, Solana is still the best layer 1 to develop such use cases. Crypteras is asking, change Sol to ADA. Is it a good idea? I cannot answer that. I cannot answer that. I personally have a very small exposure to ADA, while I have a huge exposure to Solana. So the question is, have I gone through what I've been describing? Have I actually done it? Have I sold Solana to buy ADA? I have not. So I don't know the answer to your question. I can only tell you what I have done. It's something that I think about, but it's not something that I've done. I am intending to stay in Solana. I love the space. We are still building on Solana. We'll continue building in Solana. But I can't pretend that I'm not seeing what's happening. I know who's holding Solana and who wants to continue hold Solana. So, is my camera okay? Or it's half stuck? I think also Solana NFTs are doing pretty well. And the tools that are being built around Solana NFTs is weird. Let me reset the camera, lovely friends. I can see that this is not working. Give me a second, lovely friends. We need to figure out what's happening. Intermission. Yeah, I'm restarting the camera and the camera is stuck. Come on, camera. Here we go. Works again. Works again, lovely friends. It's not the end. It's not the end. So yeah. A recap what we've said so far. The bear market continues. Bitcoin remains king. Keep your stable coins. Make sure you've put some thought on which chain those stable coins are on, which stable coins exactly you're holding, and just think of the dynamics behind those. At the same time, I've been exploring some Solana dApps, and I've obviously stumbled upon those dApps going through the hackathons, going through Dean's List, going through Grape. Some people from some builders are actually in the Grape ecosystem, and I'm torn. On one side, I'm extremely bearish due to market events, due to market participants getting extremely wrecked. And on the other hand, I'm seeing great development. The ecosystem is vibrant. The NFT market, the NFT side of things is booming, still booming. New collections that sell out, new collections that get hundreds of thousands of Solana volume per day. It's hard to decide. It's really, really hard to decide. And today, I would like us to just quickly, because we're reaching to the 1 hour mark, I want us to quickly go through a Tensor. So Tensor, which is an AMM NFT and an NFT aggregator. So really interesting. And there is a feature which I really love. I want to show you. To be honest, the biggest reason I want to show you Tensor is this tool they have, this history, the trade history is just insane. It just goes back to over a year, and it's extremely helpful. So I want us to quickly go through Tensor and take a look also at Hawkside. Two projects. Tensor got second place in one of the verticals in the Solana, the Solana Summer, the latest Solana Summer hackathon. And Hawkside has been building a set of tools which, yeah, they look decent, and they look like they can simplify DeFi and the lending and borrowing and all these platforms a lot. And yeah. So enough with my silly face. As you see, lately we're not really. I'm keeping the camera on my silly face just because there is not much to see. But I stumbled upon those protocols. Kinda like them. Big reminder. Important reminder. No, this is not paid promotion. This is not financial advice. As the rule of thumbs, again, if it's not Bitcoin, it's a shitcoin. I am a Bitcoiner. Most of my net worth is in Bitcoin. Second is stablecoins. Third is Ethereum. Fourth is Solana. Fifth is Cosmos, and then it goes on with shitcoins. I don't get any money from making this podcast. This is my adventures in cryptocurrencies. Everybody has a different risk profile. Everybody is at a different place in life, and you should do you and I'll do me, and everybody's happy. Don't take advice from people on the internet, especially those with really thick accents. Don't do it. So I stumbled upon those dApps. I saw a friend actually using Tensor to get rid of his NFT holdings, tried to get instant liquidity for other opportunities that he found, and it got me intrigued. Yeah. Let me get there. So let's go check tensor.trade. Here you go. Tensor.trade. So, what is this? What is this? This is two things. This is an NFT aggregator, which means you can see all the trades in one place, even if it's listed on Yo or it's listed on Magic Eden. You'll see a complete order book, let's say, of buys and sells, and you can execute bulk buys or bulk sells, and you also get the aggregated information, meaning how much volume does this collection have across all exchanges, all marketplaces. what is the combined floor of the NFT across all those exchanges? Are there any arbitrage opportunities between those exchanges? All these things can be found in Tensor, and it's really well made. Really well made. Like I was looking at Utes. You can click at Utes, and these are all the collections on the left-hand side. On the right-hand side, you'll see these are all the activities across marketplaces. Most things are happening on Magic Eden, but it also adds lots of other exchanges. Thing is, listing and delisting is shown, which means not all of those are sales. So as you see, lots of people are listing things and they are changing the price. So it kind of floods the book. I would love to have different colors for each buy or sell. And this is not that crazy, because we've seen aggregators in most marketplaces. What's really awesome is the AMM side of things. Nanko is asking me if I've sold my Ute. No, here's one of the Utes, my super common one, the most common NFT tier, and I can sell it. I can sell it here. I will not, because I really want to show you a little bit how this works, just because I really like the logic. So the idea here is you can buy a bulk number of NFTs. Let's say I want to buy 4 NFTs. It's gonna search across all exchanges and is gonna buy me the 4 lowest priced NFTs. One could be in Magic Eden, the other one could be in Yo, the third one could be in some other marketplace. As you see on the side, on the top floor, it will give you a global floor, which is the combined floor from all exchanges, all marketplaces, and then you'll get the Magic Eden floor, which is the exchange, the marketplace with the most volume. So the buy side is very easy to understand. You want to buy 4 NFTs, it's going to cost you 539 Solana. Gonna buy the sorry guys, it's gonna buy the 4 cheapest ones. The sell one is, of course, if I had more than one, I'd be able to click here and increase it, and it would actually sell all the NFTs I have for floor. The most fun feature, though, is the market make. Is when you create a liquidity pool, which on the one side, it has NFTs of one collection, and on the other hand, on the other side, it has Solana. So what you do is you need to add Solana for the NFT, the amount of NFTs you want to buy, and you also need to add NFTs of that collection that you wish to sell. And then you can either add an asset. If you're buying NFTs, you're gonna put a starting price which should be around floor, around global floor. So as you see, 128 is global floor. This is the starting price that it is suggesting. And then you're gonna indicate a delta. You're gonna indicate a change. And this means for every next NFT that the pool buys, it will ask for a lower price. And if it's the NFTs that it's selling, it will be asking for a higher price. You can put it as a percentage, meaning every time a Ute from my pool is sold, it asks for 1% more money. So if one youth, let's say I have 5 youths in my pool, first starting price is 100 sol. It's easier for the maths to round it up, to have a round number. So 100 sol is the starting price, and 1% change every time. So the next youth, the first youth will be bought for 100. The next youth that someone buys from my pool is gonna be at 101, and then the third one, is going to be for 102.1, and it will be going up every time. And on the opposite side of the pools, you add the Solana every time the pool buys a youth or any JPEG that you've assigned for as your collection. It will change the price to the percentage you've indicated. Obviously, if lots of NFTs are being sold into your pool, you want to be paying less and less and less for each NFT. If you're buying things, if you're selling things, it means that there is quite a lot of demand for what you're selling, so it only makes sense to slowly increase the price. This has quite a lot of room to be developed, and I see where Rihu is very, very right on. He's suggesting that more parameters can be added. You should be able to change the spread of the bids and the asks. You should be able to cancel the listings. You should be able to add a rarity indicator where you can only add a certain amount of rarity NFTs, so you can only list, for example, very common NFTs, and that's what currently is suggested. So don't use your super rare NFTs in a liquidity pool, which they're going to be bundled up with other JPEGs that don't share the same rare traits. And in the end, you'll most probably lose your rare NFT and get a floor price. So make sure to actually know what you are adding to that liquidity pool. I hope that there is going to be some kind of rarity indicator so we can actually have pools with rare NFTs. I promise you though that there is this super unique feature which I really like, and this is the trades feature. So if you go on in any side of the DApp, and you go on the top right and you click on trades, you get this drop down menu. Let me see if I can show it to you guys. You get this. Let me close my. Here, come. Where is it? Here. Yeah, look at this. I'm closing my camera so I don't occupy any space on the screen. So here you can really see what has your wallet done throughout the year. So you can see here that this is my stream wallet. This is super old. This is me selling. Look at this. These are NFTs. These are shadow coders from the Genesis Go, which I bought for 10 Solana. Let me disconnect. Let me change wallets. Because this is a much more fun. Trades. Here you go. Oh, it hasn't refreshed. It hasn't refreshed. But here, you'll see everything. You'll see that I've sold Sol Punks for 40 Solana. I've bought fortune cookies for 15 Sol. You'll remember all your mistakes. Oh shit, I forgot the camera. You'll remember all your mistakes and you'll remember all your good trades. It's a really fun place to take a look at. Let me reload because it's not showing the actual. So you look at this. Look at this. Me selling an ape. Here it is. This is me selling a degen ape for 151 Solana. Back when Solana was 200 plus. And this was the ape I sold for 151. This happened 14 months ago. It's really fun. So go to tensor.trade. Tensor.trade, go on the top right, connect your wallet and check your trades. Totally recommended. It's gonna bring you back quite a lot of memories. And if you're there, take a look at the exchange. It's a lot of fun. Look at you can buy so many. I wanna buy five Utes. The 5 cheaper Utes. These are the 5 cheaper Utes. And as you see, it's on Magic Eden and then it's on Elixir. And the aggregator works. So good stuff. Good stuff from Tensor. And these are the projects that I look at and I get bullish on Solana again. And the other project that I wanted to give a shout out because, man, they've done it very well, and they are building so many tools that if DeFi survives and is a thing in the months to come, this is pretty cool. So what you can do is you go to your portfolio. It says here your portfolio. And people were asking me, what should I do with my USDC? What should I do with my stablecoin? Depending on your risk profile, you can either get 12.58% per year APY, which is the highest you could possibly get in the Solana ecosystem now. And this is utilizing a stablecoin pool at Saber. And the pool contains Hubble USD and Circle USD, USDH and USDC, which means this, as long as the stable coins keep their peg, as long as there are no contract holes, as long as there is no malicious team member that exploits it, this will not have any impermanent loss. Just because both sides of the pools are stablecoins, there is no way one can appreciate and the other can depreciate. So the difference between those assets, the price difference is going to be extremely small, which means no impermanent loss. At the same time, USDH has a very small market share on the stablecoin economy. USDH is not a audited reserves with money insurance and a giant treasury. It's a new small company from Hubble. They are building things. And one of the things that they've built is the stablecoin. But it carries the risks that we've talked about many times. On the other side of the equation, we get a single pool for USDC. This is a borrowing pool, borrowing lending pool. It has quite a lot of liquidity. As you see, the USDC has $270,000 liquidity, while the Solend USDC pool has about $11 million. $11 million versus 270,000. So you understand that as the TVL grows, the APY drops, which is the reason why this pool has such high TVL, total value locked, and has such low annual percentage yield. Additionally, this pool here, the Solend single pool, cannot by definition have any impermanent loss, and the only risk you can have is of course the contract is shit in some way and is drained. That's part of everything in crypto, so let's not always go back to that argument. The only risk you have in such a pool is that the amount available to borrow is zero, which means all the underlying liquidity has been borrowed, has been lent out, which means if you're trying to retrieve your investment and exit the pool that you've contributed, you cannot until someone out there repays their loan. So, very easy to comprehend, very easy to go through the different strategies offered in the Solana network. And you can also choose to see what you can do with your SOL. So if you're looking for stable SOL yield, you can do MSOL, which is going to give you about 15 to 16% APY. This is the Marinade SOL. This is liquid staked SOL. So this is Solana that is locked into a validator and then is represented as a liquid asset under the denomination MSOL. MSOL is the biggest liquid staker in Solana. They were the first to launch. They are reputable. They are hardworking. They're a hardworking team. And despite not being native Solana, if we're talking about DeFi enabling Solana, MSOL is the best choice. So if someone is holding their Solana and wants to get more than what a validator would be giving them, MSOL is a decent choice. Now, if you still don't want to add them to a validator, now why would someone not want to add their Solana to a validator? Because it takes a couple of days to unstake. So you cannot react to a market movement. So if the market crashes and you have your Solana staked in a validator and you need 2 epochs to actually unstake, that's 4 to 6 days. If 4 to 6 days, in 4 to 6 days, the world can burn. You'll still have your Solana pending to unstake. At the same time, remember, a validator is the safest place to stake your Solana, as there is no contract risk there. And it gives about 6.5% yield, which is decent. At the same time, here you go, MSOL, where you get a couple of layers of risk because you have to interact with contracts, you have to connect your wallet to websites, you have to understand a little bit how this whole thing works. It gives about 10% more. I think it's a good offer. Usually you don't see such high APYs even on MSOL. So this is an exceptional APY. If you have any SOL laying around and you are okay to tolerate such risk, I like it. Now that I've seen that, I will do a little bit more research to see what the Marinade team is doing at the moment, and most probably take that APY. Kind of like the APY offered here. More things are coming on Hawksite. So it's the website is hawksite.co, and this really answers to the question: what are you doing with your Solana? Is it risky? Is it not risky? So all the answers are here. All the answers are here. And the funny thing is, Hawksite is building an array of tools. So they are building a social metric where you click on, you can search influencers via their Twitter profiles, and then you'll see their engagement rate, what coins and L1s they're following, what projects they're following, what they are tweeting about, and you can add more and more and more and more influencers and create kind of a social graph where you'll see, look at this. So Sol Big Brain is mostly talking about Ethereum and Solana. He's talking quite a lot of Near protocol and MSol. He recently followed this guy, so you can see recent follows and the tweets that got the most engagement. And from what I understand, you can create an index of influencers that you think that are important for the space, that actually drop quite a lot of alpha, and get some kind of direction of where these guys are going before the market has reacted to their tweets. Just because you'll see a bunch of powerful people tweeting towards a direction, meaning, oh, we're bullish on that, or we're bearish on that, or this is crashing, or that's a new thing that I'm actually putting a lot of money in. That's pretty cool. Now, it does resemble what Cope is making. I see Aki Samano is mentioning it on the chat, but you don't have the ability to actually search all the influencers in Cope. This is like, I can search anybody that's on Twitter, while the Cope one, they had a selected bunch, and the idea was to actually be able to copy their trades and copy their signals. I think this is a different approach, and obviously this is at its first stages of development. So we'll see what they're gonna do. What we're gonna do with it. Now, I'm trying to navigate through this website, and I'm a little bit disappointed. It needs quite a lot of work. I can't find how to reopen the bar on the left. So every time I have to like reload in order to get it to work. I wanted to show you the DegenHawk NFTs, but it's under maintenance, where you get the NFTs, you can check the NFT staking, you can see the raffles, which resembles what many projects have done. But it has so many tools, so many options, so many things. I found it now that that thing appeared, was gone. and it had a fantastic, yeah, this one where you can create you can create signals that are going to send you notifications and can give you like you can create complex kind of indices that will give you a direction. So you can add a bunch of performance indicators and trend indicators like moving averages and other like Fibonacci bands and put them all together in a bucket, and then you'll be, according to the logic that you'll create, you'll be receiving signals. Now, all these tools are under one roof. So I'm extremely curious to see where this is going to go in the next couple of months, because this is a rich tool set that has everything DeFi required. Very coin and DeFi oriented, not really NFT enthusiastic like Tensor. There is a small amount of NFTs with raffles and staking, but this is mostly going to help the ecosystem within Hawkside. Not most probably, this is part of their collection, which when you stake it, you'll be getting Hawk, which is something that hasn't been circulating yet. You can read all about it in their white paper. Don't buy any of these things. This is not an endorsement to the project that you should go buy their shitcoin or in any way. You should take a look at what they're building. They both did very well on the hackathons. They're all building like crazy, disregarding the market crashes. So let's see where this is gonna go. I think we've gone overboard from my 1 hour target that I have for these shows, but it's fine. Back in the day, we used to have 3 and 4 hour shows, back where the excitement was all-time high. On this note, lovely friends, I'm going to wish you good night, good morning, good evening, wherever you are. Doesn't matter. Stay solvent, stay liquid, stay fun, stay degen. We're gonna miss next week. I'll be traveling around, so we're gonna see each other in about 2 weeks. Of course, I'll be on voice chats. I'll be in DAO calls. I'll be in spaces. Anything that doesn't require any video, I'll be following and I'll be doing. Feel free to jump into the Grape Discord. To chat about shitcoins, to chat about NFTs and JPEGs. Make sure not to catch any falling knives. Remember that it's not the period for DCAs. It's not the period for all-ins. It's not the period for finding the new Bitcoin. For those asking, I'm going to Italy in order to do some work. I need to close a couple of bank accounts that I had there back in the day when I was living in Milan. I used to live for 7-8 years in Milano, and I still have some open financial... how can I say it? Yeah, I still have some stuff that I need to take care of. Make sure you stay in the game. Make sure you survive to trade another day. Make sure to stay on top of the protocols that are building. Make sure to stay on top of the drama that FTX has created. The contagion can be serious, so be ready to react. And my advice is, don't trade these events. Just stay out. Keep your stables. They're going to be great times to deploy them. The time is not now. I love you all. Stay cool. Good night.